Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date is November 18th, 2022. It's Friday, TGIF to everybody. Hope you have a good weekend ahead. Let's take a look at some of the technicals that are driving the Forex market in what is a quiet day today. And we're also seeing quiet ranges so far in the major currency pairs. Looking at the euro versus US dollar, we'll start on the hourly chart. And in trading this week, the range has seen a nice little low here near the 38.2% retracement. Now, that of this move, last move to the upside, I should say, that 38.2% retracement wasn't defined until we reached the high on Tuesday. But on Tuesday, we went down and tested that 38.2% retracement, which happened to test the Monday low as well, and we saw the price move higher. The moves to the upside in trading this week got above the 200-day moving average. That's this overlay of the green line here on this chart, not only on Tuesday, but also on Wednesday. But momentum could not be sustained above that level, and the price started to rotate back to the downside. You see this yellow area right here. That yellow area doesn't look like it has much significance, perhaps in the trading week, especially Tuesday, Wednesday, Thursday, and even today we traded above and below that yellow area. But if I were to go back to the 4-hour chart and take a look at this area over time, this is this area right through here. Look at the number of different times that the market found support and resistance against that level. Going back here, this is where it all started. Here we had support, 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 and then we broke below it here. Then we came back and used it as resistance and resistance. And you can see the importance of that level in our past. And then we rotate to the more recent data this week, and we've seen choppy up and down above and below that level. I think the 200-day moving average has something to do with that. But don't dismiss this level as a level of a barometer for support and resistance, along with the 200-day moving average and this 38.2% retracement. It's sort of in the middle between these levels, and the market has a decision to make whether it wants to move higher or move lower. And in between there is this barometer for the short term, either bullish or bearish. So that's my look at the euro versus US dollar here today as we consolidate really the trading week after sharp moves to the upside over the last few weeks of trading. Let's take a look at the dollar versus yen next. And if we take a look at this currency pair, the trading ranges, as you can see, very narrow here. Trying to hold support against the 100-hour moving average, also against any of these swing areas through here over the last week or so of trading here. On the top side, of course, we have the 100-day moving average. That 100-day moving average was broken in trading last week, and in trading on Monday and Tuesday kind of got close to it. Again on Thursday, the market got close to that 100-day moving average, but has been able to stay below that moving average, that key 100-day moving average, and that keeps the bearish bias and the bears somewhat satisfied. However, the 100-hour moving average is becoming sticky here and trading here today. We are trying to find support a number of different times. We went below that level. You can see on the hourly bars, but no momentum to the downside. So buyers are trying to hold on to that level and kickstart the move to the upside, but we will see what happens there. We did have inflation come in at 40-year highs in Japan. Kuroda continues to harp that zero rate policy, that inflation is transitory and that it will come down in 2023. Does that ultimately lead to more dollar-yen weakness, as we saw through, if we go to the daily chart, all through here, this trend move to the upside here? We will see. But what we know over the last month or so, the price has seen the biggest correction that we've seen in this trading year. That move came down to the 38.2% retracement, found support, and as you can see, trying to stay below the 100-day moving average is going to be our key barometer here. By the way, the 38.2% retracement is going to be a key barometer on the downside as well. All right, let's take a look at the sterling versus US dollar next. And if I take a look at the hourly chart, this is one of those things where, like I think the euro versus US dollar, where we have this yellow area where the price is trading above and below that level. And you wonder, why does he have that in yellow? And we have to go back to the 4-hour chart to take a look at this. And if we go back over time in this period here, we can see how the level was important all through here, where we found first initial support against that level and then broke below it and then found resistance against the level, and we returned to that area right through here, and we're seeing ups and downs and ups and downs and ups and downs and ups and downs around that area. So it's kind of making a mess of it, but we can still consider it a level of importance from a technical perspective. Stay above it, it's more bullish. At one point, we're going to move away from this area, okay? Now, what is in favor from looking at the price action this week, and this is the price action this week, is when we moved this last trend leg to the upside here, we came down and we tested the 38.2% retracement. That's this level right through here of this move from this low to this high right here, and we found support buyers against that level in trading yesterday, and the price has pushed higher as a result. But as a result of that hold, the sellers, if they're going to take control, they need to get below the 38.2% retracement. And this is the easy one, okay? This is just of the last trend leg to the upside. It's not like from down here, from here. This is just the smallest hurdle that you need to get to and through if you're going to be taken seriously for a move to the downside here. But it hasn't been able to happen. The market found key support against that level and pushed back to the upside here for that currency pair. This is what it looks like on the daily chart, and of significance here on the top side off the daily chart, which if we do get more momentum to the upside, is if we the 50% retracement of the 2022 trading range here. This is something for probably next week. The getting above that level at 124.99 would be the next key target. I harped on that level as a potential target once we broke through the 100-day moving average. That it's possible to get up to that level, and we did come fairly close to that level in trading here this week for the sterling versus US dollar. I want to take a look at the dollar versus Canada, because that's setting up nicely here for a potential break with momentum. What do we have? Well, we have support in trading here today against the 100-hour moving average on the downside, and we have resistance now leaning, with traders leaning against the 200-hour moving average. Also, the 38.2% retracement of the last move to the downside here is right near the 200-hour moving average. So dual level right through here, where the market traders have an opportunity to, if it breaks above, show that they mean it and have increased momentum to the upside toward the 50% retracement and the high for the week. So that would make sense from a technical perspective on a break, but right now we are just seeing the market be happy so far with potentially leaning against that level, and could see a rotation back to the 100. So the battle still is on for the dollar versus Canada. And finally, I want to take a look at the New Zealand versus US dollar. That is the biggest mover in trading here this week, or today. If we take a look at the hourly chart here, I'm going to switch from the 4-hour to the hourly chart. Fairly trendish type move, and you can see we're trading above the highs for the week as well, or we have traded in the current hour above that level. So buyers continue to push to the upside. If I go to the 4-hour chart and take a look at this, similar to what we saw in some of the other pairs, the 38.2% retracement of the last leg to the upside here stalled the fall right here in trading yesterday, and the market found support against that level. Despite moving below this trend line here, the price moved back above that. And also note right here how the price held on a corrective move in the early Asian session here today, found support against the old trend line through here, the channel trend line, and kept them and restarted the move to the upside for this currency pair. So things are looking good for the New Zealand versus US dollar from a technical perspective. If we were to move back below that trend line, or maybe back below these swing areas through here, we would see some disappointment. But right now, where buyers are trying to hold the upside going, and we definitely saw it in trading here today. My name is Greg Michalowski, I hope that you found this video to be helpful to you. If you like it, give it a thumbs up. If you didn't like it, give it a thumbs down. Good fortune to trading, and above all, have a great and safe weekend, and good health to everybody. Bye-bye now.